Assalamu alaikum and welcome traders. Today I'm going to explain a trade I executed on Thursday. I will speak in English, but of course it will be a pretty straight, plain English. Everyone can understand it. Okay, so let me show you the trade first. This is the trade I executed that day based on CRT. Obviously, Tata Soup. Tata Soup is CRT and CRT is Tata Soup. Okay, so I executed after this candle closure. Obviously, I could have executed here, but this would have been a high risk trade. I waited for additional confirmation for chain instead of delivery above these two consecutive down close candles. So once this candle closed, I immediately opened my position with the stop loss below this window. I think I would, yeah, this was my original stop loss. It was around 20 to 25 pips. Once it moved away with this candle, then I move the stop loss a little bit, like around 20 or 15 pips. So how did I execute it? What were the reasons behind this trade? As you see, it's been quite some time I've been waiting for this liquidity sweep, but price is just creating a pool of liquidity just below the main drawn liquidity. If you can see these heights, 1, 2, 3, and 4, even 5. So these are all liquidity pools. It's a huge amount of liquidity for me. And at this time, obviously, when it was Thursday, I was looking for this liquidity sweep. So these were relatively equal highs. Obviously, this is a liquidity sweep, but still the bodies are creating equal highs. So bodies are great liquidity areas than the Wixit. Okay, we will digest into this day and dissect it out. So the daily profile was, if you can see, this was an expansion away after the daily open. And if you guys know my, if you guys have watched the video about power of three on my YouTube channel, you can see that this was an expansion, like kind of manipulation till our drawn liquidity, which is the imbalance over here, H1 BPR. And inside that H1 BPR, my students identified this last fair value gap, the last fair value gap of this selling wave. So I wasn't looking at this sell, obviously. That's why I was like waiting for the best trade, which I had analyzed beforehand. When price opened on Thursday and it break away, like moved away in Asia. This is Asia, if you can see. I don't use indicators for price, but these are only time-based indicators, daily, monthly, weekly, and yearly candle open and higher time frame candles, which I think show like this. I don't usually use this, just the sessions indicator. So as the Asia moved away after daily open, and we have our standard deviations aligning at a key level around this fair value gap, then we saw a huge drop. And this was obviously a manipulation. I was like, as soon as New York started, I was considering this to be a manipulation. So once price sold off and dropped, this was before news. I think on Thursday we had GDP and unemployment claims. So there's a 5-minute charts. I was targeting this drawn liquidity, but obviously at my key level, this was the minimum liquidity for me to be swept, and I selected the last fair value gap of 15-minute time frame. This was the last fair value gap I have selected on 15-minute time frame. The drawing are the same as the Thursday. If you can see, this was a very nice trade on oil. Just mitigated back the order block and then moved away. These were my analysis on that day before, like it's 1:43 around 2 a.m. New York time, and the news was around 8:30 a.m. So I was expecting this move and then drawn liquidity. This is 718, 719, and 820. Yeah, I guess it's 820, 828. I was still waiting for my drawn liquidity, and then I will trade for a long. I selected this order block on 5-minute time frame. If you can see, this is liquidity and the 5-minute order block. I will show you. This is the 5-minute order block. Obviously, I wasn't able to trade this short because I was looking for the confirmed buy trade. And I waited all the way down for this candle to print out the 15-minute candle, huge downward candle. And this was my CRT. As you can see, CRT low, CRT high. After CRT low swept, I executed a long trade and my target was this buy side liquidity. Obviously, the first target was around the 50%. If you have watched my CRT video, the 50% of this CRT candle open or high. I usually took open if the rejection block is a huge one. Then this was my third target and then all-time high. As you can see, the 1-minute time frame. This was a low, high, low, low, and a structure shift on gold 1-minute time frame. This is CRT. No, I think this is, yeah, this is CRT low, high, low, lower low, and higher, higher high. So this is a structure shift with an imbalance. Price mitigated back the imbalance, and I actually traded right after this candle closer. And if you can see silver, this is 2-minute time frame. It is creating low, high, lower low. On 1-minute time frame, you will see a lower low and then a structure shift. So this was a nice SMT for me, and I traded it based on SMT on long time frame. As you can see, taking low, doesn't taking high. It should have took high. And these were my calculations for our trade. And my targets were like target 1, 2, for scalp targets around 55 pips. And then I held it all the way till where is the liquidity? Booked this target, but then eventually the final piece of my trade got break even because I was holding it all the way till this high. It didn't happen for me. Let me show you that entry on the low time frame itself. Oh my goodness. These are my partials. So 15-minute candle closed. Now we will switch to 1-minute time frame and we'll see a structure shift with displacement. Not a genuine, not a normal structure shift. It should have been like there should be a displacement away from that key level. So as soon as this candle printed, I saw as an this was kind of my entry signal. You can say it was my entry signal. The immediate next candle with the stop target 1 around 30 pips, target 2 around 54 pips, and then final target 3 till this open. It was a 90 pips, target 4, and final target was 35, 30, 25, 32. This high over here, 25, 32. So this was my entry. And if you can see, this is immediate retest, like mitigation of fair value gap. You can also execute trade once price mitigated this fair value gap. There were continuation entries as well. If you apply the standard deviation from 1 to 1.5, we can see a retracement. Obviously, we can add one more. This one. Where is 0.5? Should be minus. Okay. So from minus 0.5, we can see retracement. From 1 to 1.5, we can see retracements. And as you see, this is a 1, 2, 3 move, like 1, 2, 3, kind of an order block. I will call it an order block. Okay, this is an order block. So an order block with a fair value gap inside the order block. This will be our second entry with stop loss below the swing low. And the first target will obviously be this high, but this is very partial high. We will target the open. And look at these standard deviations. You can see retracements or reversals from these key levels. So nice. That's all about today's video. I would I will try to keep you guys updated on Telegram day to day. Thank you guys for watching the video. Goodbye.